Hi everybody, Eddie here. Going to do a market update for next week. So we have a pretty interesting finish on Friday. We actually closed above the 200-day moving averages. So the last few times that we tested this area right here, we got rejected multiple times throughout the year. So rejected, 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 or around this 200-day moving average. Now we did break through it a couple of times before, and it came right back down. So this time, what I'm looking for is to see we got some follow through, right? So if we get some follow through, we could come up and retest this high once again. So this high here is pretty important. There is a gap that's up here as well that still haven't been filled around that 4,200 area. So I'll highlight this gap right here. So this gap right here around 4,200 still haven't been filled. So if we actually rally up, we retest this area, come back, right? Come back and hold the 200, we can come up and test these areas up here. So it can go up as high as this 4,300 up here and retest this high. And if it does, chances are that we can come out of this downtrend and continue higher, right? So if we look into the weekly chart, so you see that this area right here is right around the 50-day moving average, right? So if we come up, retest this area, we break the 50, we come back, we retest the breakout area, and then we come up and fill this gap right here and continue higher. So if we come up like this in the larger time frames, it'll look like that we're broken out of this channel. We're going to retest, and then we'll continue higher back up to test the highs again. All right. So if that's the case, then it could very well happen. And we usually, when we start January, if January finished as a positive month after a very weak year previously, it usually end up the year positive. So if that's the case, if we are managed to rally up for the next couple of weeks and then finish higher, we could see a green year for 2023. So that's one of the things I'm looking at. Right now, it's still right at the edge, so don't try to get too far ahead of yourself. If you want to trade this, look for a confirmation. So if we break the high of this and we hold the highs on the next trading session, Monday's a holiday, so on Tuesday. So if we break out and hold this on Tuesday, it's likely that we can continue higher and finish up around this areas right here. Now, if it gets rejected, and then we come back and we lose about 2/3 of this candle, chances are we can come all the way back down again. So, pay very close attention to see what's going to happen next. These are very important levels to look at. So you can see, I'll set my alerts up here. So if you can break out here, I'm aiming for this gap up here. If it gets rejected around these areas, then I'm looking forward to come back to retest this area right here. So this 3,900 level is really, really important. If you want to stay up and break out, you need to stay above 3,900 now, because we finally broke through it. We thought it was going to test this area and then gets rejected. That hammer looked like it was going to do that, but it was actually a bear trap. And then we actually went up higher and broke through. So now we're looking for this area to hold. There is a gap right here that haven't been filled. So gaps usually get filled always at some point in time. So there's a gap that haven't been filled yet right over here. That potentially could get filled if we get rejected and coming back down, right? There's also a gap down here that haven't been filled, and there's a bunch of gaps down the bottom that haven't been filled yet. There's also some gaps up top that haven't been filled, so you can really go either direction. Looking through the options chain for next week, for January 20th expiration, a lot of those key areas are around that 3,900 and 4,000 and 4,100 area. So it's going to be somewhere in between that area for January to finish off with. So hopefully if we finish above 3,900 and we finish the month green, we could see a green year for 2023. Right. So if you look at the monthly chart, it's actually consolidating still. So it is holding this range right here. And to measure pullback. Excuse me. You see how we bounced right off the 50% Fibonacci off the monthly chart, and we're holding on to here. So we're looking for a breakout. And if it does break out, you can expect we will continue higher from there. So one of the things that I have been looking at is the Dow. The Dow has been really strong. As you can see that we actually start already broken out, retested the breakout and continuing higher right now. So the Dow is ahead of the S&P 500. And the reason for that is probably because it's because inflation. A lot of people are actually a lot of the funds are actually rotating their money into more value names since recession is expected to happen in the next year or two. So so a lot of the rotation has been going into value names, and right now a lot of the money flow is going into material stocks and energy stocks since China's reopening. So so there's a play in there, and you can see right here we were in this megaphone, we've broken out, retested, and we're breaking up. So if we actually break above 350, we will retest the highs again. All right. So right now we're actually just down 5% from the highs. So that's 7%, sorry. So that's not too bad at all. So if you actually invest in the Dow, you didn't lose that much money in the past year. So you know, this could be a sector you want to get into since this is leading out of this downtrend. So maybe look into some Dow stocks to see what's actually moving within the Dow, and then maybe there's some swing trades around that area. One interesting that I've been looking at for a while is Bitcoin. So Bitcoin was doing absolutely nothing for the longest time, and suddenly we've broken out. As you can see, this is a very nice base here. And usually when you have a really nice base, what you look for is the break of the 200-day moving average. So that's exactly what's happening right here, broken out with volume. Yeah, it broken out with volume, and then once we break above here and above this 22, we're going to retest this 25. If it breaks down above 25, you can expect to hit 30, right? So if that's the case, then those Bitcoin miners like MicroStrategy, Riot, Mara, they could have a really nice pop based on that. And Bitcoin is a trade, it's not really an investment. So if you want to trade it, that's the way to trade it. And all you have to do is just follow the trend. Once the trend breaks, just get the hell out because they tend to come crashing down when they do. So just follow the EMAs, and then you know, once they break, just get out of the stock. Another thing to look at is IWM. So IWM has a really nice break of the 200-day on Thursday. Well, it finished on Wednesday above it, and then broke over Thursday and Friday. So now we're starting to break out of this range. So we set a higher low in right now. We're looking for higher highs. So if it can make a higher high, then we can finish the month pretty green, right? So if that's the case, then this could be the reversal to the upside. So we're looking at around 190, 196 area. So if it comes up to around that 196 to say 200, this region right here, it'll create a higher high base off that, and then we can break above here, then we can call this pretty well kind of like a round and bottom. So and then it can form somewhat of a cup and handle type of pattern up here, and then maybe we'll finish higher off that, or we get rejected around that area. So these are areas to aim for in the short term, is right over here at first, and then we're going to go to that 195 to 200 level, and then if that finishes higher, we're going to retest this 210 212 area right here. So you know, keep a close eye on these. You know, usually the market doesn't bottom till the Fed start pivoting, but that doesn't mean we won't get like a short-term rally until that happens, right? So you know, just follow these short-term moves and just trade it until things change. That's pretty well all you can do right now, right? MDY, same thing. It was in this megaphone as well, broken out of the megaphone. So this is not quite as strong as the Dow, but it is stronger than the S&P 500. So if you can break above and break above this 485 and maybe hit 500, then chances are we're going to just come back, retest, and continue higher from there. So everything's looking pretty good for short-term plays. So if like I say, if we finish January strong, then likely we're going to have a strong year. So the Qs is the only weakness in the bunch because it's still well below the channel. It's well below the 200-day moving average, and it is picking up some strength, but it's not nearly as close as in all the other indexes right now. So that is the weakest sector at the moment. And usually the tech sector is the leading indicator out of bear market. So this one's a little bit quite different. Value names are leading out of the bear market and not the growth names. So there could be some opportunities there if they just started late and then finally they pick up towards the end of the year. So we'll see what happens. But yeah, looking through the FANG names, which we'll look at later on, we'll see how far behind it is compared to some other stocks in other indexes at the moment. Right. So, interesting thing is the VIX is below 20 and it's continued to drop. So that's a fairly good sign. So if the VIX drops to about $15, right? This is the area where it's very likely to bounce back up. So if the index pops and retest this area, it would almost time it exactly for this to drop to around 15. And then a big reversal will happen on the VIX, which means that there could be a rejection right around this level right here, right? So just pay close attention to that when that happens. Keep a close eye on the VIX to see what it's doing. As you can see, a lot of times we bounce off this bottom. We haven't bounced off there just yet. So if you actually come down and test the 15 where it usually stays, right, in the bull market, it usually hovers around that 15 area. So if it actually comes back down and it bounces back up, then likely that could be our peak. But if it comes down just flowing around, the market can actually just continue to climb up. So just look at the relationship between the two and just keep a close eye on the levels right there. All right, so let's take a look at value versus growth. So value, as you can see, is almost right back to the highs, all-time highs, while the growth is all the way down here and is not moving. So, that's where the money's flowing into, is value names on the index. So if you are going to swing trade, those are the names you really want to trade at the moment, not the growth names, because growth names are still fairly weak, and it doesn't show any type of strength just yet. All right, as you can see, ARK still doing nothing. So and one of the things that I am looking at is Chinese stocks. So Chinese stocks, as you can see, there's a nice gap up right here above the 200-day and it's continue higher. We broke above this right now. So if this actually continues, it's probably most likely pause around this 35 area right here. And then if it comes back and it holds this breakout area, you can most likely go higher. So China is opening back up and they're buying like crazy. Like they're buying a lot of material, energy, everything to again set to reopen, which they're doing. They're open up everything right now. So there will be high demand for material. So that might be a sector you can trade short term. And likely the index, the Chinese index will likely pop on that news and go higher. So all right, just going through some of the lists right here. TAN, which is the solar power index, has been performing pretty well. We did buy FSLR, which did really well in the past couple of weeks. So you can see right here, we bought on dip on the first confirmation of a reversal right here, and then it just kept going. So we did trim a lot and move our stops up to lock in at least 15% gains. So if it actually pulls back, we'll probably most likely get stop out somewhere around right here and lock in there 15%. It's up about 18% since we bought it. And so, it's a really good trade. It is a bit extended now, so it's likely to pull back before you can go any higher. It kind of went parabolic off this base that built down here. I wish I bought it down here, but catching the last wave is not too bad either. CSIQ, same thing. CSIQ, it has this really nice base. It broken out. It's extended now, so it's likely it'll come back. Right. So those are the type names that are moving at the moment. And if you look at some of the Bitcoin miners, they've been going up like crazy. Like Riot doubled in literally the last 2 weeks. So it's, if you bought them when they were down there and took on the risk, then you are getting paid at the moment. So like this, Mara was down at threes. It's trading well above 100% right now. So if you were watching these type of stocks, I actually wasn't not. I did not want to touch Bitcoin whatsoever. So I missed out on the trades. Anyway, let's take a look at the FANG names. So the FANG names are still not moving that much. Like Apple, still very strong downtrend. It is at the demand level, which is over here. So it is bouncing off that 124 area. Likely you'll come test 140 and then come back down. Because the trend is still very in a downtrend. So these names are really, really weak at the moment. All the tech names are pretty weak, but they're some of them are looking better than others. Like AMD right here, very strong downtrend right here. The wedge is getting tight, so potentially there's a breakout soon. Is a fallen wedge type of pattern. So these type of patterns, they tend to get tighter and tighter, and then they break out. So just keep a close eye on AMD. So if AMD comes back down to, say, test the 50 area or maybe the 40 area, does a screaming buy down those areas there. Amazon. So Amazon, when it was down here, I sold a put on it, try to take some shares to see if it'll come down to 70. So I sold it down around 75. I think I closed it off on Friday. It decayed 70% already. So it bounced off this 80 level. It's coming back up to this 100. Likely you'll test this 105 before a rejection if it's going to get rejected. It is still a very defined downtrend. So most likely you'll stay down. It's probably just, it needs to consolidate before the breakout. So it could rally as high as 115 and then get rejected, but still it's not ready yet. I kind of want to see it come down to around 70 and then start basing between 70 and 100 and then a breakout after. Right. Meta still going fairly good off the lows right here. So it's almost double from the lows already. When it was trading down here, I said it was a little bit of time to buy it because it's just valuation wise, it's just so cheap right now. So if you willing to hold it for longer term, could be a good play. Right now, it's aiming for this 150, 160 area. Likely get rejected around this area right here. So there is still a little bit of room left, but probably leading up into earnings and then maybe get a rejection on earnings. Google, same story. They're all just downtrend and basing. So the 200-day moving average is coming down pretty close. So what you want to look for is the 200 to come down to the price and then consolidate around the price and then a breakout after. So that's what I'm looking for. And right now it's turning around this 84 area. So 84.92. And if it actually stays around this area, consolidate for like the next month or two, or even if earnings are good, we could see a pop, but most likely get rejected around that 105 area. So if it stays good and consolidates and then get the breakout after, this is a good time to start accumulating shares. Even if you dollar cost average in, this is a good area to start dollar cost averaging in, because you get it in pretty cheap and you never know when's the bottom is going to be, right? So you only want to allocate 50% of your position size during the downtrend, and then add the other 50% as it gets out of the downtrend and start going into the bull cycle. So that's the best case, best strategy to use with this type of play for long term. So I am looking for it to come down a little bit more. I try to get some shares of this, but my puts expire. It's going to expire and it's decayed like 80% already, so we might not get there. So I'm just going to sell a fresh set of puts to try to get shares at 80 for my first leg, and then 70, and then 60. So these will be 3 areas I'm looking to buy and dollar cost average in for my long-term portfolio. Microsoft, same thing. They're all pretty well the same, so nothing new here. It's basting. 200 is pretty close. So Microsoft didn't come down as much as the other ones. It's been holding pretty good. So if you actually start basing around here, you can see it start turning. It needs to break above this 270 and then come back up to test this 295 area, and then if it breaks above 295, it's likely trend change and going higher from there. So that's what you should look for. Netflix, it's stair steps up at the moment. We got to see how it goes on earnings. If earnings are good, you can see this thing pop up and test 400 and most likely get rejected at 400. Or if it's no good, it's coming all the way back down to at least 280. So keep an eye out. Earnings are usually pretty bad for Netflix. So you can see right here, there's a lot of times it's really big gaps. So just be very careful when you play earnings on this thing or hold through earnings. You really want to hedge it if you're holding through earnings. Nvidia looking like a basin pattern. It's an inverse head and shoulder pattern with a neckline over here. So if it breaks above 200, then it's likely that we can go higher. So keep a very close eye to this region, this kind of like 200 and 210 area. So this is the zone that it needs to break out of. Once it breaks out of this zone, as you can see right here, there's not a lot of things that can stop it from going up any higher, right? Majority of the demand is right over here. So we talked about this a while ago, saying this was the high demand zone, right? And this is the area it bounce off, right? So as you can see, we came down to demand zone. We have a really sharp rally up to retest this area and got rejected the first time, but we did finish with a higher low. Right now, we're looking for a higher high and then a breakout of this area to continue higher. So keep a close eye on that. If it actually breaks above here, you can start going back into trading Nvidia. Tesla. So we talked about this head and shoulder pattern before. I said if it broke 200, it's going to get very ugly. So we broke 200. It got really ugly. We lost about half. It went down as low as $100. Right here is buyable. I actually seen a lot of flow coming in at this level in the last week or so. So potentially get a pop probably into 140, 160 for the month. Most likely get rejected somewhere along right here. That they do have earnings coming up, so maybe that's catalyst to do it. If not, it's coming down to $60. That's 60 to say $70. That's our target, right? If it comes down to 60 or $70, it's time to buy leap options. Buy 2-year leap options. And then buy the shares. This is where I would buy a significant amount of shares down here, and then play the recovery, right? You can hold it for next few years. You're likely going to double, triple, whatever your money. So that would be what I'm looking for. There I actually do have a plan to get some shares around 100 to start off. I call it my advanced wheel strategy. So that's where I'm going to start off at 100 if he hits again. And then if it goes on 6, I'm just going to straight up buy leap options and buy shares, right? But on the way down, I'm going to use my advanced wheel strategy to collect a ton of premium. It's not like the normal wheel where you collect that little bit of premium. My advanced wheel, you could collect a ton of premium, and then you'll bring your dollar cost average down to around that $70 anyways. So that's where I'm going to play it. And then right around 60, I'm just going to back up truck and buy. Anyway, that's pretty much it for stocks and for next week. So it's going to be a pretty interesting week next week. Look for that breakout, look for that, and look for that rejection around that 4100 to see what happens. That's what we're going to play off. All right. Looking at the aggro. I've been using the aggro as confirmation of direction. In the last couple days, I did try to counter trend, and it did not work out well. I started off actually on Thursday down like 6 figures, and then I came crawling all the way back up to slightly above break even. But it was because I was counter trend, and I should have just follow the trend. Last few days it's been pretty choppy. Trying to follow the algo in a choppy session doesn't work that well. But if you know your levels, you can still trade off of it, right? So because there's a lot of big ups and downs in the last few days. So and the internals are conflicting with the price action. So it tells me there's a lot of retailers involved and the smart money is not buying, but it's just mostly retail buying. Usually that throws off the internals quite a bit. So that's probably what it is. So as you can see right here on Friday, we have that big gap down, and then we broke above the high right here and we filled the gap. Right. The algo caught right here. As soon as he broke above right here, the algo caught the buy signal, and also on the 2 minute time frame, catch it much sooner, right? So you could have caught that gap fill, and then as he pulls back into rewap, shot all the way up to finish the day, right? So that was a really good buy point that you can get into, and then it did tell you so right when we got around this peak right here with the gap fill and then the pullback. So if you follow that and you actually went back in, you could have made a lot of money just following the aggro on that. And as you can see, like the last few days, there's quite a bit of chop around there, but majority of the time you caught the big moves, and that's what's important. So the idea behind the aggro is to combine technical analysis and using the aggro as confirmation. And what the aggro does is it allow you to stay in trend longer, right? So if you know how to trade with the aggro, then you're going to make a lot of money when it's trending, and then you're going to lose a little bit of money when it's not trending, because you obviously need to set a stop loss when you're trading. So if it doesn't work out, you can lose a little bit of money, but if the trend actually does work out, you're going to end up making quite a bit of money. So and then overall you make a profit, right? So if you learn how to manage your risk and able to use something like the aggro, you can make money over time. Anyway, that's pretty much it for this week. Make sure you like and subscribe to our channel and check out our courses if you want to trade full time. Our day trading course is very intensive and it's long. And we do a lot of live sessions as well, and catch up sessions throughout the year. It does include 1 year Discord. So if you want to be part of a community, come check us out. Link in description below. See you guys next time.